I'd like to welcome Micah Curtis today. She is a credit specialist, and I know you guys always have questions about credit, and she is an expert and going to hopefully answer a lot of the questions that we commonly have. So welcome, Micah.
Thank you, Rachel. It's great to see you.
So happy to have you here. Now, Micah and I had a nice conversation yesterday. We talked about a lot of the common questions and the common thought processes that people have about credit. So the number one question that people ask me, Micah, that I'm sure you can address is, how come when a buyer looks at their credit score on Credit Karma and it says they have this number, and then when I pull their credit for a loan application, it's a different number? Why is that?
That is one of my favorite issues to address. So Credit Karma, listen, it's a great resource. And what they use is called a Vantage model. So there's all these different scoring models that are out there used to calculate your score. So a fun fact for everyone listening, there's a total of 50 FICO algorithms used to calculate your score. When you go to freecreditwise.com, Credit Karma, it's a Vantage model. Generally speaking, it's about 40 to 60 points higher than what you pull. So most people, when they see their Credit Karma scores, they're like, oh my gosh, this is a fantastic score. But then all of a sudden they go to you and they're like, that's not as good as what I saw earlier. So it's very discouraging. And the key thing to know is it's a different algorithm. So every industry has its own set of algorithms. So mortgage, auto, credit card, online, insurance, if you want to count that as a fifth. So the key word is algorithm.
Awesome. So it's not me trying to ruin your life. I'm just trying to
It's
get
not
you a
you.
mortgage. and it's a big deal. People always are confused about that. So that's number one. Number two, biggest question that I get from people is when I pull their credit and we see some items on collections, what do they do to get that off of collections? So do they pay it? Do they leave it alone? What would you say, Micah?
Really good question. And it's complicated, but to simplify it, 99% of the time, I don't want clients to touch a collection. If they end up paying a collection, one of the principles I always teach on is that there is no bias towards wealth in the algorithms. People are like, wait, what does that have to do with a credit, like with an actual collection rather? So what it means is that if you have a collection, say it has a $10,000 balance and you pay it down to zero, the activity becomes today. So the algorithms pick up that you have a new collection on the credit report. So now the score drops. The negative item stays another 7 years from date of satisfaction. And now all of a sudden you're sitting here stuck with a satisfied collection on the report. And people are like, what the heck? So I just paid all of this money and my score dropped? What? How does that make sense? So our goal as a company is to uphold the laws that we as consumers are protected by, one of them being the FCRA, the Fair Credit Reporting Act. So our goal is to remove derogatories with, or if you've made the mistake, without the balance.
Awesome. I know that helps a lot of people. So another question for, say a borrower has, or say a buyer has, they haven't established enough credit. I see this sometimes with first-time home buyers. What is a good tricky way for them to improve their credit or just establish credit if they haven't already established a lot of credit?
That's a really good question. So authorized user is going to be something that I always discuss. It's the fastest way to establish credit if you have someone who is responsible that you can piggyback off of. And to give a quick understanding to our viewers of what an authorized user is, I'll use myself as an example. But essentially, I was added as an authorized user to my mom's oldest credit card. So she called up Discover, said I want to add my daughter Micah to my credit card as an authorized user. The beauty of this and why it's so effective is I actually receive all of the history from the day that she's opened that card in about 45 to 60 days. So my scores went through the roof. So essentially, she assumes zero risk. So if you're thinking of co-signing for your children, instead of doing that, go ahead and add them as an authorized user to your oldest credit card. Get them established credit history of their own. You assume zero risk as the main borrower, and the authorized user, right, whether it's me or if you add your child, they are going to actually reap the rewards of all of your positive spending habits.
Perfect. Okay, last question, and something that we just talked about on a team call that I thought was really fascinating. Can you really quickly explain the difference between the due date for a credit card and the reporting date for this credit card, which is two different things, and it affects how your credit score shows up.
Yes, absolutely. And this is one of the biggest things I like to clear up for people. Oftentimes I look at somebody's credit report and I'm going over their utilization on their credit cards. And I'm like, okay, things are a little bit high on this credit card, this credit card, this credit card. The balances are reported as high. And they're like, wait, I don't understand. I just paid those off. That's $0. That's wrong. And I'm like, well, the problem is that you didn't pay it by the time the credit card reported. So there's due dates and then there's reporting dates. Reporting dates, generally speaking, are about 2 weeks before the due date. So usually you're being reported to the credit bureaus before you've even been sent the bill. So the problem is most people are being reported at a higher balance than they intended to because they didn't know when their reporting date is. So easy way to find out when the reporting date is call up the credit card company, the bank, say, what day do you report? They'll tell you, and then you know on that day, that's the day you're going to want your balance to reflect 10% of whatever your limit is or less. That day is important. The other 29 days of the month don't matter because it's not reported.
So important and really good information. There are a myriad of scenarios that you guys out there will run into and that Micah runs into when it comes to your credit. So if you have questions about how to improve your credit, then Micah, how can people reach out to you and let you help them to repair their credit?
Well, for one, I mean, they can find me through you if they're working with you as a lender, or they can reach out to me on my cell phone, which is 949-922-4830. My cell phone is always the best way, and don't be shy, as well as if you want to send me an email. My email is Micah, M-I-C-A-H, @homeloansassist.com. So, but email is just as good as phone. However, I do prefer phone. It's much easier because too many S's in my emails.
Perfect. And guys, Micah is not somebody who only works with people who have bad and ruined credit. Sometimes it's just credit challenges for people that have overall really great financial situations that maybe something happened and they missed a payment to no fault of their own. So if you have any questions whatsoever, then reach out to me and I can direct you to Micah or call her on her cell phone. Thanks so much, Micah.
Thanks, Rachel.